Folks, it's Owen McCafferty, and with me is my good friend, buddy, Dr. Dave Tack, and together we want to talk about what the issue would be in a professional fusion practice, be it in veterinary medicine, dentistry, or dermatology, of being onboarded once you've made the determination that you'd like to proceed with the process. What happens next, and then how does that occur?
Well, maybe I could talk about that because my practice went through this process. And first of all, the practice is evaluated, and it's evaluated by Owen's team. And Owen has, for 48 years, evaluated veterinary and dental practices. He was the father of the American Animal Hospital Association Chart of Accounts. He's had a lot of experience in evaluating these practices. And one of the things I'd like to ask Owen is, when you're evaluating these practices, do you come up with a number, what the practices work? Do you sometimes see problems that the practice owner could tweak to increase their valuation at that point in time before they became a part of the fusion?
Absolutely. You got to remember the model. The model is superior because the real participation in the partnership occurs not at the point of access, but at the point of departure. And what happens in terms of the process, this onboarding or analysis that occurs, is we spot opportunity. And the nice thing is, you can then work on that opportunity to improve the practice, as opposed to having the value set at that point and not having the opportunity to change it or do anything different. So we think our model is superior to anything we've ever done before, because we will be able to make determination, allocation through disproportionate distribution in a partnership. So in answer to your question, of course, as a matter of fact, that's one of the main purposes.
So that brings up, and this does have to do with onboarding, but in the last entity we were involved with, one of the problems, and it became, I felt, a pretty big problem, is that if you went in with an evaluation of X, you stayed there, and you may have had a practice that really grew, and there were equal distributions to all practices, no matter how well you did. So if you were a practice that was growing and you were doing really well, you weren't being rewarded for that. Everybody got a distribution that was based on what they came into the group as. And in fusion, that's been changed. And maybe you could explain a little bit better than what I just did, but that was a problem, and only the fusion group has it figured out that those that do well are going to be rewarded. Those that don't do as well aren't going to be penalized.
Right.
They're not going to be penalized, but
there's not going to be unjust enrichment. They're not going to receive part of the bounty of the efforts of another.
No, that was a problem with the entity that we had, and as a part of the onboarding, your valuation didn't change. And so, anything else in the onboarding that they would need to know about?
Oh, sure. So the diagnostic that we use is the calculated value report, but it's not the basis, the epic basis of bringing in. We are poolside, and yes, we did order. So sorry for that interruption, but wish you were here. The calculated value report is the diagnostic tool, but it only gives you a snapshot. And if you were thinking of it from medical terms, we are benchmarking. We are taking a series of laboratory diagnostics and we're going to measure it. And then based on that, we will see how everyone in the group is doing over the years.
So Owen, how long does it take for this process? I imagine, well, I think that we had to get stuff together and financials and everything, and you had to have time to look at it. From the time you start to the time you give these practice owners evaluation, how long does that take?
if the information is gathered, and let's assume that you engaged a phenomenal accountant, and everything is absolutely clear, correct, and we get access to the accountant and free permission to discuss issues, have them pull out their work papers, even scan in some of their work papers and send them to us so we understood what the practice was clearly and distinctly. In a matter of a couple of weeks, we would come to a conclusion. And in that onboarding process, that information then is limited in scope to very few people. So for example, in the first step, we would make a determination and call you up and have a plan established. Maybe we'd do it by Zoom, and just to make sure that what we see and what you want to do are going to be correlative. One obvious advantage is that you get a real good scoping out if you're looking at it from an equine standpoint.
So you're looking at a practice from the financial part of it. Is the practice itself being evaluated, the facilities, the equipment that they have, do you have somebody going through the practice that evaluates that to see, are you going to be a fit, are you not going to be a fit, or maybe if you could explain that,
Sure.
Because there's more than just the financial part of it.
Well, we always have kill points and stops. So let's say we let you know what we see. You agree that there could be areas for improvement, but you want to proceed. So we go to part two. And in part two, we send one of the staff members in the same membered discipline. So for example, in veterinary medicine, I might ask Dr. Tack here to just fly over to your practice, take a physical inspection of premises, discuss issues. From a dental standpoint, I might ask my good friend Dr. Mark T. Bentley to go to your practice, take a review, talk with you, make sure that you understand, and just physically to have that person-to-person contact. In dermatology, Dr. D. Allen Tack is a very accomplished doctor of dermatology. And also a Mohs surgeon, and he would be going into a dermatological practice and sitting down, visiting with people, just talking to make sure that everything makes perfect sense. So that person, such as Dr. Tack here, would then come back with a short report, review the report, not only with a member of our administrative group, but also two representatives from the advisory board. We don't ask the entire board be involved in it, but at least two members. And those two members would take a look at what's going on, where things are, see the report, and then make the decision that an invitation is appropriate. And that's pretty much the onboarding process, and it's really a valuable process because it gives you a good opportunity to see through the eyes of other individuals where the practice is going and what the practice is doing. It's a rather quick process too. And the exciting thing is, as a candidate, you're brought in knowing that all of the other members have gone through the same scrutiny in terms of the due diligence and the onboarding in. And during the visit, for example, Dr. Tack's visit, there will be discussions about what you would want to do if everything is a go and you're proceeding forward. Because in that instance, there are some things that you would have questions on and you would have a chance one-on-one.
So let's say that everybody comes to the decision that this candidate would like to move forward. How does that, what needs to be done? So we come to an agreement, we know what the evaluation is, everything is fine, or they can fix things that need to be fixed, and so you're moving forward. Then how does that process take place, that conversion from that person owning that practice to becoming a unit holder? Is it a unit holder? Yes, unit holder in this fusion organization, maybe if you could go through that process, because it's an interesting, I think it's an interesting process, and it's a process that my family just didn't get initially, and thought, well, somehow we're losing out. We weren't losing out at all, but Owen can explain this a little bit better.
Yeah, the process itself, in terms of understanding what the characterization is, and it's really a lot simpler than anyone would expect from hearing it the first time. It's a humanistic, very hands-on type process where we would sit down, make sure that that person and their family understand what's going on and where things would be. We focus in on the family so much because the family itself is part of the influencers for the decision making. So we would be available to answer questions from any other individual. There is a difference in terms of what our onboarding would be versus others. We have documents that have been written and designed to protect the freedoms of each one of the members in the limited liability company. As a result of that, there are no special deals that are cut for what individual thinks that they're just above and beyond everybody else. And in past efforts, we've tried to accommodate some of the lunacy, and it was very, very costly in terms of our attorneys talking with their attorneys, watching the clock spin and the effective hourly rates for both sides in a classic Socratic exchange where really what they want to do is to show each other how smart they are. We've eliminated that.
So, another point, if I was listening to this, if I was sitting listening to this, I'd go, okay, so we have this exchange. What are the taxable consequences to this exchange? Maybe if you could explain that, because there are none.
Well, the taxable issues relate to the contribution of assets to the partnership, which is a tax-deferred event. So there is no immediate tax issue in the transfer of the partnership interest. We chose the partnership interest too because if we had equity that would then be poured down to a structure such as an S corporation that only could have specific types of shareholders, it would invalidate the election. That doesn't happen with a partnership. So let's say I had a partnership originally, limited liability company taxed as a partnership, and it poured down the assets. Equity interest would then be exchanged, limited liability company units, in the professional fusion practice for those assets. And then that would pour up to the contributor. And the contributor would be the partnership that originally had it, the limited liability company. Most probably the limited liability company that contributed the assets would stay intact and would operate. And distributions would go back from the professional fusion practice up to the limited liability company, who would then make decisions in the secondary layer of how cash distributions would be made. It really is a very simple process, but what it does do, again, as my personal hero, Milton Friedman, would say, everyone is free to choose. There is truly home rule in early 20th century Belfast. And obviously that's my family originally was from Ulster, and they were kicked out by Cromwell, and I'll leave expletives out, and went over to Connacht. But that home rule, that freedom, becomes such an important part of what we are doing in professional fusion.
So, I don't know if we have enough time to talk about it. Something else that just came to my mind. If I was then going to become a part of fusion, am I going to be making the kind of money that I was making before? I mean, how much is this costing me to be a part of that? Is it like a private equity where they buy my practice and now I'm working on a percentage, or how does that work? Are they going to make less money than what they were making before?
The answer is no if you do that which you've done before. If you do different than what you've done before, for example, you've taken some of the recommendations, you should make more. And it's designed to make more because of the synergies that we talked in prior podcasts about the synergies of income, expense, and cost. Because we have designed an administrative group that's very efficient that will allow you not to have the same costs incurred. But here's an important point. There will be costs that will be less, but they will be less because we've negotiated in group contracts. If you have a brother-in-law or you have a sister-in-law or a best buddy that depends upon you paying an outrageous amount for their goods or services, and we find a better way, then they won't have that subsidy by you anymore. In fact, in one of the prior groups, people would jump in for that very reason, because it was a way to not have to continue with that brother-in-law with the expected subsidies that were being available. And Dave, it looks like we are at our limit.
Okay.
And we want to continue about what happens in the onboarding process in a part 2. Hopefully you could hear it. We took an experiment and we are at a beautiful locale, but you can hear the pounding music that's in the background. And we will continue to try to do these things, make them interesting, but let's keep the time down.
Okay. Well, thank you. Thank you all.
There's more than we could ever talk. Thanks so much.